Welcome to the Daily Insights That Matter. Now, after the merger of two powerhouses of the Indian banking system, which is the HDFC Bank and HDFC Limited, HDFC has emerged as the world's seventh largest lender, bigger than the likes of many iconic super banks. Now, the mega $40 billion merger was approved in the month of April and was successfully implemented on 1st July 2023. Now, HDFC Bank took over the parent entity HDFC Limited in a form of a reverse merger and will trade as HDFC Bank. Now, this transaction is termed as the biggest transaction in the history of India Inc. Now, with the merger completed, HDFC now trades at a market cap of about $151 billion or 12.38 lakh crore rupees and has emerged as the seventh largest lender, bigger than the likes of a Morgan Stanley, Goldman Sachs and the Bank of China. HDFC Bank is behind JP Morgan, who sits first on the list of global banks with a market cap of $438 billion, followed by Bank of America, Wells Fargo and HSBC, to name a few. Now, the $40 billion merger is termed as the biggest transaction in the history of India Inc. The new entity, that is HDFC Bank, will have around 120 million customers, greater than the population of Germany. It is also going to increase its branch network to 8,300 branches and boast of a total headcount of over 1.77 lakh employees. Now, the combined shares of HDFC Twins will have the highest weightage on the indices, which is close to 14%, much higher than that of Reliance Industries. The merger of HDFC Limited and HDFC Bank has been a major event for the banking industry in India, as it highlights the importance of regulatory policies on the Indian banking system at a time when other global banks like the Silicon Valley Bank, Signature Bank, First Republic and Credit Suisse have sunk and are recovering from economic losses. Now, the accomplishment of the merger also has a positive impact on the Indian banking system, as it demonstrates the strength and competitiveness of Indian banks in the international arena, boosting the reputation of the Indian banking sector as a whole. Now, in June, India experienced yet another month of weak external trade performance, with both goods and service sectors facing pressure. Now, the overall exports combining merchandise and services declined by approximately 13% compared to June 2022. Merchandise exports specifically contracted by 22% year-on-year, reaching $32.97 billion, marking the steepest decline in the past 3 years. However, service exports saw a marginal rise of 0.7% to reach $27.12 billion. Furthermore, merchandise imports also declined by about 17%, resulting in the goods trade deficit that remained over the $20 billion mark in June, although it decreased sequentially. Now, on the services front, the trade surplus narrowed to $11.2 billion in the month of June, which has been the lowest recorded in 2023 so far. Through this data, we see how India's merchandise exports have been hampered by the slowdown in major economies brought on by the conflict in Russia and Ukraine, rising energy and other commodity costs, clubbed with inflation and monetary tightening in the major economies. However, it was having the opposite effect on India's services exports till date. Now, we see India's services exports falling or rising at a very slow pace for the month of June. While we are facing short-term headwinds, in the long run, initiatives like the PLI scheme and the Make in India, coupled with the strength of our service industries and the shift in demand from China, are all expected to benefit India's exports. Additionally, the trade surplus generated by the services exports acts as a protective measure against external risks and the overall trade deficit. Now, the World Trade Organization had predicted world's merchandise trade volume to be growing at 1.7% in 2023 and by 3.2% in 2024. Looking ahead to 2024, we see that the trade growth is expected to rebound further. Having said that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com